Tesla shares closed down by nearly 3% after Morgan Stanley downgraded its price target on the stock on Tuesday. It's been a very rocky road for the electric car maker this month, kicking off with an 8% intraday slide. This after it launched a cheaper Model 3 sedan, raising concerns over its margins. Meanwhile, CEO Elon Musk continues to battle with the SEC over his tweets, and Tesla is expected to unveil a fourth car, the Model Y, this week. Serge Berger is the head trader and investment strategist at thesteadytrader.com and joins us down the line from Orlando. Serge, thanks for joining us. Let's start with Tesla because there's so much going on with this stock, a real tug of war between the Musk loyalists against the bears. But in terms of the shares, 2019 has been a bit of a struggle.
It is a difficult stock to trade. And, I will tend to stay away, and I try to keep my clients away from situations like this where there's just too much news flow. Besides the fact of what the news flow actually is here, as you alluded to, the man is actually fighting the SEC, which, in both absolute and relative terms, that's usually not the greatest thing to do from a headline perspective. Having said that, just looking at a chart here, very simply, you can see that this stock is essentially still trotting sideways. So I'm going to just draw two very simple lines. I'm going to draw this line here, which basically means that the stock essentially had a breakout take place at this point here, which was early 2007. But ever since, and this is maybe the more important point, I think, for traders who wants to play this stock to keep in mind, is that the stock essentially is stuck in a very wide trading range on the low end around $250, on the upper end, let's call that high 380s. That's a wide range, but it's a volatile stock. So really what one could do if one wants to play the range is buy this in the lower end of the range, which we're nearing right now, right? We're right now sort of in the high 200s. Maybe there's room down at 250. But one could play a mean reversion move. That's about the only thing I'd be willing to do at this point. Again, just keep in mind it's a very volatile stock with headlines.
So let's switch to Netflix now, because we saw a strong rebound at the turn of the year. The stock has now steadied a bit, but from a fundamental perspective, we saw some strong earnings in January, but February and March have been a bit less convincing in terms of the share price moves. So do you think that the stock looks like it's going to roll over, or is this just a pause for breath?
I still think Netflix is a great story. The question is, can they continue to grow at the rate at which they have? And you have to look at this, and I will make this statement not just as it relates to Netflix itself, but also a lot of these sort of U.S. techie growth names. They're going to have a very difficult time with comparing their next earnings report, the first quarter of earnings report out in a few weeks, on a year-over-year basis. The comparisons are going to get very, very difficult. I think the stock ultimately is going to struggle to make a new high anytime soon. However, from a trading perspective, and I mean a trading perspective, there is a case to be made that this stock could, what we call, basically break higher from here. You can draw the lines any which ways you want, but this is a stock that now has support at its 200-day moving average, the red line on the screen, the 50-day moving average, and they're starting to slope up a little bit again. So there is a case to be made, maybe buy this stock somewhere in the 360 range, and maybe trade it up towards 400. With 400, a round number, tends to have attraction, and any strong bearish reversal you get out. So trading, yes. After that, I have a tough time imagining a stock can really rally to sustainable highs.
Now, finally, I wanted to take a step back and look at the broader US indices, because we've started to see this divergence between the Dow and the S&P. Actually, I think it's by the greatest margin since 2009, partly because of Boeing, the underperformance there in the Dow. Do you think there's a trade here around this divergence, if indeed we do see some kind of convergence going forward?
Yeah, actually really interesting and a great point. So you look at the Dow, which is more of a price-weighted type of index, versus some of the S&Ps, which are cap-weighted, and Boeing is the highest price stock in the Dow. We're looking at the DIA ETF here, and also it's also the highest price stock and the highest weighted. So when Boeing shares fall, as they have badly over the past a few days or so, that obviously is going to weigh on the Dow. That's only one side of the story. What's actually really interesting is that the Dow does have some tech stocks in there, but it doesn't have that many. So the S&P 500 has a lot more tech stocks. So to show you the other reason of why the Dow was outperformed, and I think it can continue to outperform, is if we take the NASDAQ 100 ETF, or the QQQ is a ticker symbol usually, I'm gonna divide that by the DIA, which is the ETF representing the Dow Jones Industrial Average. And if you look at this recent pop here over the past few days, this most recent price action, that is the relative outperformance of basically, it's called technology stocks versus the Dow, which is what you're alluding to. Now, if you look at underneath the surface a little bit more, I mean, Google had a big run over the past number of days. Again, Netflix honestly could catch up maybe towards 400. The NASDAQ 100 itself here basing and potentially has some more upside. Now, again, I'm not quite sure if it has what it takes to break to sustainable all-time highs, new all-time highs, but I do think there's a trade here, and I don't think it's necessarily mean reversion. I do think tech could continue to outperform for a trade.
Serge, thanks so much for all of your advice there, as always. That was Serge Berger, head trader and investment strategist at thesteadytrader.com. I'm Victoria Scholar. Thanks so much for watching IGTV.